please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi there, good morning and welcome to Chartbusters, the show where we highlight all the buzzing stocks of the day, get you expert advice on how to trade and capitalize on these stocks. I'm Mangla Malu, with me is Nigel D'Souza. Looks like not a bad morning so far. We opened at record highs, sold off a little from there. The Nifty Bank as well as the mid caps are seeing a sharper cut. For the Nifty though, it is interesting because on the one hand you have ITC, which is at the low point of the day, dragging the Nifty lower, and on the other we have Reliance. That one's moved to the high point of the day, supporting that index on one end. So we have two heavyweights out there, but the mid-cap space, that is a buzz. Dabur, Nestle, Raymond, what have you, all the consumption stocks at record highs.
That's right, Manglam, and we have clearly got a show where we're going to be getting you all those stocks that are busting the charts. We'll get Prataap snacks, we'll get you a bite from Raymond as well, and also we'll try to pull in a cement company. For the time being, let's get in Ashwini Gujral. Hi Ashwini, good morning. What's the trade on the Nifty? We're mildly lower. Will you treat this as a buying opportunity? And also, how do you trade the Nifty Bank? Because that's down 150 points.
See, the market has turned sideways, and today's gap up gave you a good opportunity to get short, or at least on Bank Nifty. Now, the problem here is that there is clear macro news which is impacting it, crude going higher, rupee going lower, plus the overbought, extreme overbought position of the Bank Nifty. So my sense is that the Bank Nifty is going to have a fairly bad day here, and Nifty is now going to settle into some sort of a range. That range could be as wide as 11 250 300 to say 11 550 on the upside. Similarly, Bank Nifty will probably go below 28,000, and the market will like to consolidate around these levels before it moves up further. On individual stocks, I think Canara Bank is a sell with a stop of 284, target of 270. ICICI Bank is a sell with a stop of 340, target of 325. And Bombay Burmah Trading Company, that's a buy with a stop of 1730, target of 1780.
All right, Ashwini, thanks a lot for that. We will come back to you all through the remainder of this day. But the stock on our radar is Prataap Snacks. That one surges in trade after, the company announced an acquisition of Gujarat-based Awadh Namkeen. We will get chatting with the management. Mr. Kumath, I believe, joins us on the phone line. Thanks a lot, Mr. Kumath, for joining in. First up, if you could tell us just some pedantic questions. Where are you funding this from? Do you have the cash on your books, or are you going to take some debt?
No, we already have cash on the books. We are not taking any debt for this deal.
How much of cash was there on your books?
We have around 140 crores, and the cash required is close to 145 crores for this deal.
Okay, all right.
We already have the cash.
Okay, you have the cash in your books. Amit, if you could help us out, this company that you're buying, is it profitable? What are the margins on it?
So the company's revenue currently is around close to 140 crores.
Right.
With EBITDA margin of 7.5% to 8.5%.
Okay.
They are number four player in this Gujarat category.
And on the bottom line, it is a net profit company. These margins are looking pretty much in line with what you are doing, or maybe in fact more or less.
Right.
Yeah. Is it profitable?
3.5% to 4.5% margin.
It's a net profit company is what you're telling us.
Yes.
Okay. All right, that's fair point, Amit. Is there any debt on their books?
They have very small debt of probably 2 to 3 crore rupees.
Okay. So, the thing that I wanted to know is you're saying it's done revenues of close to around 139 crores or 140 odd crores. But if you take a look at the scale of this revenue from 27 crores in FY16, it's jumped to about 140 crores. What exactly happened for this company for the revenues to jump so much? And are these revenues for real? Because that's the one concern that the street is having.
No, the revenues are definitely real. If you see, they launched only 4 years back. And when they launched, they expanded. The geographical expansion was doing Gujarat market, so have they expanded so well. So the last year revenue was 100 crores and they reached 140 crores just by geographical expansion in Gujarat. And we see a huge opportunity in Gujarat market for us also.
Give us some numbers, now. Give us some numbers, Amit. You're saying that there is, people are really snacking on. Tell us, what is the scale you're looking to grow this to? You're telling us they are predominantly in Gujarat. What about other states? You believe you can grow it further?
If you see Gujarat market, Gujarat is hardly 4 to 5% of the India population, and they consume around 12 to 14% of the Indian snacks. It's a huge opportunity in Gujarat.
That's a good way of putting it.
Right. So
There's huge potential in Gujarat market.
yeah, I mean,
Second, if you see, they are very strong regional players in the Gujarat market. So we were finding it difficult to go on our own Gujarat market. So we
Right.
feel that with our acquisition, Yellow Diamond product can also go well in the Gujarat market.
You know, I like your rationale, Amit, the way you're explaining it to your shareholders as well as your viewers.
you know what's actually interesting is outside of Gujarat, people would associate these with another liquid that they would consume. And in Gujarat, they cannot consume that liquid.
And yet they're snacking on. Imagine if they could.
Okay. All right. I mean, what is the revenue that Pratap Snacks gets from Gujarat right now?
It's very little. It's probably close to 12 to 25 crores in a year.
Okay,
very,
so
very
this
little.
strengthens your position in Gujarat. What was the rationale behind this valuation? Because you're saying this company is growing very fast. It has a firm foothold in Gujarat. From 27 crores, it's gone to 148 odd crores, or rather 140 crores. You just paid around 1.1 times sales, and that's half of what you're trading at. Why this valuation? Is there any red flag that people should be worried about?
No, absolutely no red flag. The only reason is basically it's very difficult for the regional companies to expand on their own.
Okay.
When I first met Raju Bhai, it clicked me on the first go that this man is extremely good and can do very good in Gujarat. They were expanding at a faster pace, but they're not thinking big. So when I met him first, I explained that why don't you think big, and together we can do something wonderful in this market.
Okay, all right. Amit, will you be taking this from 80% to 100% at some point of time? Is there a clause out there?
Yeah, in next 4 to 5 years time.
Okay.
So Raju Bhai will run the business for us. Raju Bhai and the other partners will run the business for us for next 4 to 5 years.
Okay, Raju Bhai will be quite happy, that with this deal, I'm sure. And, but let's focus on your business as well. Input costs have gone up. Potato prices are moving higher. I think oil prices have moved up as well, edible oil prices. Is there likely that you could see some more compression on your margins? In the first quarter of this year, you did around 7% approximately, 6.5% to 7%. Will margins move down from here?
I think the worst is already behind us.
Okay.
Okay, the worst is behind you all. Before we let you go, Amit, if you could tell us a complete outlook for this year. You have 150 crores of revenue coming from this business, which is likely to grow, as you have said. Add to that, you have around 1,000 crores of revenue that you did the previous year. And you launched a lot of new products as well, the sweet business, yum pies and all of that. So with that, FY19, FY20, what are your revenue targets and what are your margin targets, especially given you're saying that the worst is behind?
So I think we are targeting to grow by 18 to 20% for this year and the next year. The margin would be in the range of 7.5%, independently on Pratap's side. On our side, we can get a good contribution, but it's difficult to comment on our revenue right now. But stand alone, I think we can get a revenue of close to 1250 crores this year.
All right. Thanks a lot, Amit, for joining in. That was the management of Pratap Snacks telling you that Gujaratis do snack a lot and it is a positive for them. 1250 crores is the kind of revenue that they will be doing going forward. With that, we'll slip into a short break.
Well, the AMFI Mutual Fund Summit 2018 kicked off earlier today. Let's cut across to Mr. Deepak Parekh of HDFC.
Because there's complete consensus that the future of Indian mutual fund industry is extremely positive and promising. However, I've tried to identify 5 trends and insights that could define the future of our industry. Let me state upfront that these views are my personal views and has nothing to do with our institutions. The first trend is doubling of AUM in the next 5 years. The average assets, as you know, under management today is at 24 lakh crores, and most asset managers forecast that the AUM in the next 5 years will be doubled. That is, it will be 50 lakh crores. So what drives confidence that the AUM base will double? I think there are several reasons. A growing middle class, a larger working force population, better job opportunities will help increase the pool of investable funds. We Indians are always savers. Inherently, we are savers.
Well, let's get back to the markets then. Raymond is a stock that's outperforming in today's trading session. So let's get straight to a big CNBC-TV18 exclusive then. I caught up with Mr. Gautam Singhania, the chairman and MD of Raymond. He says he's the buyer of the Raymond shares at around 1,000 rupees, and he's certainly a buyer at these prices. He adds that if the Thane land is monetized, then they'll be debt-free immediately. Let's listen in.
The fact that I bought shares in the market and it's disclosed information is I believe there's great value in it. Number two, I believe in my company. So the fact that I am willing to invest in my own share and I have bought at levels higher than what it is today.
Yes. So do you have a particular target that you want to take the promoter shareholding to?
That's an internal target I won't discuss.
But you're a buyer at these levels.
Well, I have bought. So whether I'm a buyer today or not is not for me to say, but the fact is I bought at 900 levels, 950 levels. At 1,000 rupees I bought. So that's all disclosed. So if I'm a buyer at 1,000, I'm certainly a buyer at 750. We are clear that we wanted to launch this 20-acre project.
Yeah.
This is really to unlock value.
Right.
And we are in the right direction. We look at it every day, every week. That's the top priority. I'm not able to tell you exactly what we're doing because nothing is done. You know, like they say, it's not done till it's done.
Let's talk about the other non-core assets, the auto space, the hardware business. Now those businesses, they have been
doing very well.
They're doing well.
Extremely well.
But at some point of time, would you be looking at a buyer for both those?
Show me the money. I'm a seller. I have demonstrated in my career that I'm not averse to buying and selling businesses. If somebody had shown me the money, it would have been gone by now. You might sell it. You might be looking at other options.
Right.
The fact is, philosophically, it's on our radar. How to skin that asset or monetize it or whatever we have to do. Selling is one option.
Right.
That doesn't mean we're not looking at other things.
Could the other things include a demerger of business? And
it could be anything. Sometimes these things take longer than you expect.
What's the roadmap there? Do you have a particular target in mind in terms of scalability of that business? Is there a possibility you list that business separately? You must be having a plan, right?
What have we done in the last 12 months, okay, 18 months? Let me explain to you. We had a partner in JK Ansell. We bought the partner out. The FMCG business, we brought in a whole new management team. We put a focus into it. We revamped the board. We have an external chairman. This is the only promoter-listed company, holding company, where a promoter has stepped off as chairman of the company. The bottom line is the same. How do Raymond shareholders get value out of this?
Right.
We're in the business of making money.
Right.
That's what we got to do.
What about the debt in the books? On a quarterly basis, you're spending around 50 crores or thereabouts as interest cost.
Yes.
So the debt in the book should be roughly around 2,000 crores, very, very approximately. You'll have a target in mind, right, to bring down that debt?
See, we're at the end of the capex cycle.
Yeah.
Your capex in Amravati and Ethiopia, that took the debt up.
True.
Moving forward, we're not got any capex planned. Your cash flows will become positive, and your debt will come down. From that. Number two, getting rid of NPAs, non-performing assets.
Yes.
Whatever we can get rid of. Supposing you get rid of the auto component, it will bring it down. If you're able to monetize some of the land, that will bring it down.
True.
Efficiencies, better working capital management, etc., all will bring debt down. So it's in the right direction. I don't think we're alarmed about our debt. We might be 2,000 crores and not 2 lakh crores, but we want to be debt-free over a period of time.
How long would that be? You want to be debt-free?
It's very difficult to say. I mean, today if I monetize the land tomorrow, I'll be debt-free tomorrow. If it takes 3 years, it will take 3 years, but the intent is there to be that direction. I'd rather undercommit and overdeliver.
Positive cash flows in FY20 is on the cards with margin uptake as well. That's something that you've set out. We have seen it on your presentations as well, but that's on the cards.
Yes.
Mr. Singhania, you've mentioned this in the past, that you believe that Raymond is going to be a blue chip company. So what's the growth plan? How do you make this a blue chip company?
See, it again comes back to my same answer. You've got to do the right thing for the company. So each business has a plan.
Yeah.
Now, let me give you an example in the textile business. Whilst we have the legacy business, which is the fabric business, which grows at a particular growth rate, that doesn't satisfy us.
Right.
We have the new verticals. Ethnic wear today, very big. We have a big potential now. I mean, if you take the ethnic wear market, it's a 5,000 crore market. Now, what can I get 20% of it?
Is that a possibility?
Why not?
Mr. Singhania has been that flamboyant person with the fast cars, maybe the jets. All that's behind now. Are we looking at value creation? And more importantly, it's separated, right? From the business.
See,
the business is separate, and personal expenditure, that's separate. That's
completely separate. But my image is what you guys make it. I guess you decided to focus more on my business now, so I guess that's where the focus is. But having said that, I'm also now on the FIA internationally. My passion for cars is not going to go. I don't hide it behind anybody. I enjoy my cars, so what's wrong with that?
All right, interesting conversation there. Remember, you can catch excerpts of that all through the course of the day. But Nigel, that was a big question that you asked. Is the worst in terms of, the image that he has behind, and is he going to focus on value creation?
Yeah, and I mean, he says that he is definitely looking at monetizing the non-core assets as well as the Thane land. Only time will tell, because otherwise you have 2,000 crores of debt and you have assets that are worth double that. So let's see what happens in the time to come. But, at some part of that conversation, I also tell him that you have got the players in the dressing room. When are they going to come out there and play the innings of their life, right? Because it's no use having them in the dressing room. They need to come out there, take guard and hit the ball somewhere whenever the time is right.
Whenever the time is right. I'll definitely watch out for what they do in their FMCG business as well.
Absolutely.
But were you wearing a Raymond suit while you did that interview?
I can't tell you that.
Okay, all right. On that note, what we'll do is we'll slip into a short break, come back, and Deutsche Bank has come out with a note recently on the cement companies. We have the management. All right, let's go straight to the corporate that is waiting by. Remember, a couple of days ago, Deutsche Bank came out with a note recently where they're positive on the cement sector. To discuss the outlook for the sector and his company in particular, we have Mr. Shailendra Choksi, the whole-time director of JK Lakshmi Cement, joining us now on the show. Thanks a lot, Mr. Choksi, for joining in. So the report of Deutsche Bank says that, cement prices are weak. The outlook is positive on higher utilization. I remember you coming to us about 20 days ago, said that cement prices are at 4-year lows and you expect them to move higher. 20 days hence, have you seen some uptick in cement prices? And for the remainder of this year, what kind of cement price growth do you see?
Well, currently when we are talking, it's a monsoon quarter and normally prices take quite a dip. So I think the only consolation is that we have not seen a dip. The prices are stable, and that reinforces our belief that post-monsoon, come September and October beginning, the price should get corrected. As I mentioned earlier, the prices are very, very low. And I think the bigger villain, the bigger piece of the villain has been the cost increase that we have seen in fuel.
Okay.
Notably because of the pet coke price, which have jumped by nearly 60 to 70% year on year. And with prices going down, so it has been a double whammy in that sense, and therefore affecting the margins of the company.
Absolutely.
And this beating has been more in the north and west part of the country, so where we operate mainly. So I think we've suffered, and I think the only way to move from here is eventually to go up.
Absolutely. All right. You had told us this the last time as well, Mr. Choksi, that cement prices at 4-year lows. Yeah. So you're saying prices will move up. Raw material costs, they had moved up. You think now they'll plateau out from there? And what would that mean then in terms of an EBITDA per ton? Because in the first quarter, you have done 430 rupees per ton. Where do you see, for the for the second half of the year, what could we see the EBITDA per ton? Can it go up by 20%? Can it be 500, 550 rupees? Your analysis, sir.
Yeah, I would expect so. You see, because we have corrected a lot of our own pieces in terms of logistic costs, in terms of our efficiency, which were already very high. We have brought them still higher. I think the only piece which now remains is the pricing. So even a 10 rupee a bag would translate into, and that will go straight to the bottom line. And what we are talking 10 rupees a bag is still not covering the cement, the cost of production which has gone up. We have seen a jump of almost 350 rupees per ton.
So, Mr. Choksi,
about 20 rupees a bag.
Mr. Choksi, so the sense that you're getting is 420 rupees EBITDA per ton. That's not sustainable, and you can improve it. To what level can you improve it then?
Well, I would expect that, being still on the conservative side, that by last quarter we should definitely reach about 550 plus.
What's the debt on your books, sir?
I mean, sorry?
The debt on your books?
You see, the gross debts are sub 2,000 crores, and we have a net cash surplus with us of about 450. So the net debts are only about 1,550 crores.
Okay, all right.
So the debts are fairly manageable that we have.
So you said your gross debt is how much, sir? Gross debt is how much in your books?
It's about 2,000 crores.
2,000 crores. So your net debt actually will be 1,500 crores is what you're saying, right?
Right.
And you're looking at what kind of a reduction for this year?
You see, we are paying off roughly 200 plus from our debts.
Okay.
So I think we'll we'll come down to about 1800 gross. Yeah.
Okay. All right. Thanks a lot, sir, for joining in and giving us all those details. Important point that he's made, that 100 rupees is the EBITDA per ton increase. Will be very interesting to see how it goes ahead from here. With that, actually, in fact, we're getting the footage coming in from the new finance minister, reinstated finance minister Arun Jaitley. Remember, today itself we got some communication that came in. Looks hale and hearty,
yeah,
hale
good
and healthy,
news.
and that is good news for the economy, for the polity, as well as the country going forward. So wish him good luck. Wish our country good luck. With that, we wrap on Chartbusters. Stay tuned to CNBC TV 18. Trading Guard comes up next.